It's become more noise than signal. The news changes on a daily basis, and I think the market has figured that out. We had Liberation Day on April 2nd. It was postponed on April 9th until July 9th, and now that's been postponed until August 1st. And the market reacted badly to that news yesterday, but not that badly, all things considered. And it's not down much
Yeah.
today because everybody's talking about this is the art of the deal. This is the way negotiations go when Trump is in charge.
I will not mince words, folks. A subscription to Yardeni Research is worth its weight in gold, not because of what he tells you to do, but what he tells you not to do, which is to go to cash in market time. Here's the final paragraph written yesterday. We are going to stick with our contrarian position and bet that the dollar will rebound. I just have to stop it there. Talk about contrarian, Ed Yardeni. You look at a dollar rebound, and do you look for a healthy earnings season?
Well, I'm not sure I know of anybody who's bullish on the dollar. I think everybody's not just neutral, but just outright bearish. It's as though the dollar is about to be replaced as a reserve currency by the euro and by the yuan and the yen. And I just don't buy any of that. I think that there's been kind of a reaction to Trump's haranguing of the Fed, particularly Fed Chair Jerome Powell. I mean, that's clearly weighed on the dollar, as has the trade turmoil. But as we've seen in recent months, Trump is negotiating. There's a lot of bluster and bullying going on there. That's the nature of deal making, particularly in New York City real estate negotiations, which is where his background is. So I think the market's kind of getting used to it, and I think that people are going to realize that there's not that much positive things going on in Europe, other than maybe more defense spending, and the Japanese economy doesn't look all that wonderful. Meanwhile, the U.S. economy is resilient. We've got a huge capital market, so I'd be bullish on the dollar here, and on earnings, I think it's a layup. The estimates for the second quarter have been revised down to such an extent. I think they're only expecting a 3% increase. And just like the first quarter, I think we're going to get a big upside surprise.
I see you've got your research assistant in the background there, Ed, coming into the picture. We appreciate that. That gives us confidence. Hey, Ed, I mean, Bloomberg Economics is out with some research today saying they think, at the end of the day, tariffs are going to probably level out somewhere around 15.5%, up from about 2%, 2.3% today.
Yep.
That's got to have a negative impact on global economies. How do you price that in?
Well, it's interesting. Global stock markets are basically around the world at an all-time record high. The MSCI for the world is at an all-time record high. It's pretty impressive, and stock investors obviously believe that this tariff war isn't going to last very long. I don't think it will last very long because the administration has to recognize, they do recognize, that the midterm elections are coming up. Now, it seems like, well, that's November of next year, but the administration can't afford to have this trade war cause a recession in coming months, because that will obviously hurt them in the midterm elections. And they've got a very thin majority in the House and the Senate.